Welcome to Tradespoon. My name is Vlad Karpel. I'm CEO and founder of Tradespoon, and today we're going to have our weekly strategy roundtable discussion where we talk about current market conditions, answer any questions you might have about your subscription or market conditions or strategies or anything else you can think of. Disclosures are very important. Please read them. I am going to go to specific trade ideas. If this is the first time you see this slide, I encourage you to visit optionscreening.com so you can understand the risk associated with trading stock or options. I'm not a financial advisor. I'm not registered with FINRA or SEC. I'm showing you what I do in my own account based on my own risk tolerance level for general education information purposes only. All right, before we talk about trading psychology, let's jump into market and see what's going on with the market. So obviously, nothing new, but it's all over the TV that spiders pull back 10%, right? 10% definition of correction. So spiders are in correction, 10%. QQQ is in correction, down more than, I think, close to 13, 15%. Value stocks are down 10%. Small caps are down 20% or more. So by definition, they're in bear market, almost in a straight line, right? There's no kind of ABC type of pattern. It's just a straight line down. Obviously oversold by any technical indicators you decide to use, but then the question is, is this the bottom? Will it rebound? Will it continue to sell off? A lot of it has to do with uncertainty in the market about the tariffs, right? And what impact it will have on the future earnings. Even inflation data that came in this week, even though it's indicating that inflationary pressure are subsiding and inflation is going in the right direction, but it's a backward-looking data, right? The tariffs are only starting to put in place, and just because they're not reflected in February data, they could be starting reflected in March or April, or May data, right? And people don't know, right? So I think until the tariff situation is resolved, or at least the new administration kind of backs off from this very aggressive rhetoric and finds some kind of a compromise, right? I think this uncertainty will persist, and you're going to have these violent moves up and down. Or, Powell will say, we're not going to be in wait and see mode. We're going to at least start, lowering interest rates, or we're going to pencil in, 4 interest rate cuts this year, right, to stimulate the economy, right, something positive. In terms of interest rates, 10-year yield is kind of pinned to 4.3%. It's been trading like that since end of February. So that's positive for the market. It's off the 4.8, 4.3. Lower interest rates, stimulating the housing market, borrowing costs. So this is net positive for the market. Dollar off the highs, overly exaggerated fear of tariffs causing inflation, and the dollar is at 110, and now instead of causing inflation, everybody's fear that it's going to cause recession, and dollar is down, right? I think net it's positive. Dollar is off the highs. We haven't had, 100, 103. We've been trading for the past few years between 100 and 115, right? Since the recession started in 2022, right? The sell-off in 22, we've been trading between 100 and 114. So we're at 104 on the lower side of the range, and that's net positive for dollar. Bitcoin is a good proxy for risk taking, and that's also down about 30% down. Yeah, 30% down. So high beta, like ARK Innovation, NVIDIA, Bitcoin, they're down 30%. Small caps 20%, and then the lower the beta, the smaller the dropped. So the question is, what's next, right? Is this the bottom, or is the market going to continue rebounding? That is $1 million question. So the way I look at it, I always look at the position, right? Going back to game theory, it doesn't matter what I think or what you think. The question is, what do majority of market participants think, and where do they put their money? Where's the money flow? Is it going to bond market? Is it going to equity market? Which strike price people buy on futures and equity and options data. So so let's look at March expiration, which is next week, and April expiration. Even if you're not trading options or you don't understand options, for stock trading it's also very important, because you can see based on these spikes, this is where there is a high open interest, and the dealers have to either buy or sell stock to hedge their positions, right? Because for every time somebody buys an option, there's somebody on the other side selling it, and market makers, dealers, have to be neutral, right? So that's why yesterday when we reached 550, almost by magic to the penny, we reached 550, we rebounded back to 560. Now we're trading 560, and we're kind of going back and forth between these levels. And if 560 is broken, next level is 565. So if you look at one standard deviation between now and April expiration, right, then positive scenario, we get back to 570, somewhere between 570 and 580 level, right? This is a 1 sigma move based on the demand and supply for options data right now, based on the VIX being at 24, 25. If going into the earnings season, we could be 580 or 570. On the downside, we could be at 540, right, if there's a negative news. And then anything between, kind of bell-shaped distribution curve. Okay, so this is a positioning data. This is how I would think about trading, right? Trading is distribution of possible outcomes, right? And you know that one standard deviation happens 70% of the time, two standard deviation happens, 90% of the time, right? It is correlated to volatility, right? Volatility jumps, that range expands. Volatility contracts, that range will contract as well. So this is positioning data. If you look at the stock forecast toolbox, our model, it basically says short-term model, right? If you just analyze in daily prices fluctuations, you can see a strong downtrend, which hasn't resolved itself. Potentially in the next week or so, get to 540, 530 level, right? And if you look at the spiders chart, which a lot of technicians are actually now watching, monthly chart, right? You can see that a lot of people basically have an opinion that the 480 level will hold, even if we are in recession, right? Sorry, if we don't have a recession. So if we don't have recession, then the previous bull cycle ended in December of 21, right? So that's the 480 level. So as long as we're trading above 480, this long-term uptrend is still intact. If we break below 480, more than 20%, then this is probably definition bear market and probably recession. So assuming there is no recession, I think worst case scenario is 480, right? Because we gave up half of the gains between January of 22 or January of 24 and now, right? So half of the gains, 50% retracement. So by definition, if you look at the medium-term trends, we're still in uptrend as long as these 545, 530 strikes hold, right? If you look at this, where people are thinking, they're holding these 530, 545 strikes. If you zoom out, right, if you say all, right, outside of the 530, then gamma positioning is a lot less. But you already have put buying at 450 strike, 480 strike, very large put buying positioning, because some of the bears think we can get to 450 or 480 level between now and third Friday of April. So my favorite expression, try not to call the bottom, try not to predict, don't trade what you see, but not what you think, right? So whatever your opinion is on recession, odds of recession, or odds of, hyperinflation that doesn't really matter, right? What the opinion of majority of things. And right now, majority still are bullish. right? If we drop below 545, right, we were at 550 yesterday. If we drop below 545, 530, the only level of support you see is 480. So that basically opens the door to that 15 to 20% correction. So that's how I would look at this. So this is on the downside. On the upside, we need to get bulls need to get above 565 level, right? If we can get for a few days above 565, then bulls are going to be in control, right? We're at 560 right now. If we drop through these 545, 530 level, then bears are in control, and next level would be either 500 or 480. Any questions? Signs of capitulation that everybody's waiting for. Keith and I discuss them on a daily basis. One is VIX, right? Usually some kind of a, right now it's been an orderly correction, right? Every day up 2 steps backwards, 2 steps forward, right? Slowly grinding lower. Nobody's panicking right now. VIX did jump to 30, which is elevated, and it's actually now at 22 handle. So you can see collapse in VIX. These are all signs of bottoming process, right? That VIX collapsing, you have a sell-off on above average volume. You can see QQQ. Last time QQQ volume was back in August sell-off, and that's where it was the bottom, right? On August 5th, there was a end of the sell-off in QQQ in 24. Same identical volume. So if you're a bull, you will argue these are all signs of capitulation. QQQ hasn't made any new lows in the past 5 trading sessions. So this is the beginning of the bottoming process, but the beginning of the bottoming process could be very violent, right? We could jump to 500 on the positive news, or we could drop, another 5% or 10%. So I think there are signs of bottoming process, but it's too early to say that this is the bottom, right? That, okay, QQQ is not going to make new lows in the next few months, right? That is too early to tell, right? But the signs are there. The VIX collapse is a good sign. Personally, I like to think about, I know that a lot of the there are trillions of dollars worth of contracts will expire next Friday in equity and futures market and in VIX markets on Wednesday, and we have a press conference, Fed decision next Wednesday. So starting Wednesday and going into for the next few weeks, going into the end of March, the way I'm thinking about it, there's 2 scenarios. We're either going to have a scenario of COVID, right, where the market pulled back right after the February expiration, right? After, if you go back to 2020, right, it started after February expiration and reached the bottom basically during March expiration. Identical, not the magnitude, but the timing. Timing is all identical, almost to the day, right? And then there was a positive catalyst. Powell came out and said, we're going to buy distressed assets. We're going to stimulate the economy. I think he used the word bazooka at that time, or Trump used the word bazooka. I forgot who used the word. And then the market found the bottom end of March, and we know what happened afterwards, a V-shaped recovery. That's one scenario. The other scenario, very similar to today, is 2018, right? November, December of 2018. Similar situation, Trump administration in reverse. The first 2 years, they're concentrating on stimulating the economy of the 2016-2018 presidency, stimulating the economy, lowering the taxes, deregulation, market rallies 2 years. And then the second half of the administration, they decided to increase the tariffs. So initially market dropped 10%, right? And it didn't really recover, right? This is weekly chart. So for a few weeks, it basically traded in that 10%, down 5, 10, up 10% range. And then in December, Powell came out and said, we're going to combat the rise in tariffs, and the only way to combat the rise of tariffs is to increase the interest rates. And as soon as he said that, there's another 10% correction. So in my mind, those are the 2 possible outcomes. It's either going to be 2018, where you're going to have 5 to 10% correction to the downside if Powell next Wednesday decides to come out and say, listen, we need to combat these 50% tariffs on European Union goods, and I need to start raising rates. Well, the market will drop 5 to 10%. Or it will be where Powell comes out and say, listen, we need to stimulate the economy. there is very low probability of recession, but we see the economy slowing down, so it warrants, 4 rate cuts this year. And I think then we're going to have maybe not V-shaped recovery, but at least a strong rally to the upside. So those are 2 scenarios I think any trader should be ready for and prepared, right? I always look at the what if scenario. We always, from trading psychology point of view, we're always split between 2 fears, right? One is the fear of missing out. Market is 10%, everybody's buying and I'm not, right? This is opportunity of a lifetime, and Trump will start lowering interest rate, deregulation, he's pro-economy, and I'm missing the boat. And the other extreme is fear of future regret, right? The fear of future regret, basically, you're overly exposed to the market drops now 20% or 25%, and then you drop. So everybody experiences these fears, and the way I usually deal with them, you close your eyes, right, and you basically say, okay, how will I feel if the market is up at all-time highs by end of April, and how will I feel if the market is 20% down by April expiration? In both cases, you want to kind of go through this rehearsal exercise. It's the positive outcome. If you're bullish, you want to go, okay, market is going to 10% correction, good enough for me. I'm ready to go in. But how much capital am I willing to invest? And that it goes back to this fear of future regret, right? If we do drop to 500 and 480, I think that would be a great opportunity to deploy your cash, but you can only deploy your cash if you have cash, if you're not on a margin. And you don't get on the margin calls. So these rehearsal exercises are extremely important. So I encourage everybody to go through them. Look at your account. Look at, QQQ is up 2% right now, right? Spiders is up 1.5%. Look at your portfolio, right? If your portfolio is up right now 4%, 5%, my personal opinion, you have too much exposure to high beta stock. You probably want to use this opportunity to raise cash, right? If you're if you're down 1% right now, then maybe you have too many shorts, right? And maybe it's time to thinking about trimming some of your short position. So I would look at your overall portfolio, how it's correlated to the QQQ and spiders, and decide whether you want to trim, based on, this move, right? Either from 560 back to, we can go up 50 points, right? By end of April, or we can go down by 50 points, right? And personally, I think market is extremely overbought. So if I have to pick the side, pick the side that we do have a rebound. But I do recognize that I have no idea what Trump or Powell is going to say in the next few weeks. So, technicals don't really matter, and it looks like Trump doesn't want to back out of his position. And I think he's intentionally reversing his approach to previous administration, where he's concentrating on tariffs first, and only then he's going to try and concentrate. So, you could argue both sides, right? But you need to be prepared for both outcomes when it comes to position sizing, right? It's all about position sizing, and how many positions you have. All right, so we can go over these 2 scenarios. How many? Well, one standard deviation between now and April was 580. So let's not go. Two standard deviation would be all-time high, right? 580, I would say it's a 1 sigma move, right? Between now and Friday. Obviously, it could be more, but let's just call it. I think there's a huge overhead resistance at 580, right now. So 580 plus 20 points, right? Or from the lows down 20 points, right? 520. So let's just go through these scenarios. So scenario number 1, right? Scenario number 1, we're breaking through the 580. We're moving more than 1 standard deviation, right? On positive news, right? Earnings are great. Trump's back off. Powell, lowers interest rates, and we are moving 2 standard deviation moves. Scenario number 1. Scenario number 2, similar to 2018, where for a few weeks nobody knows exactly what's going to happen. Trump doesn't back out, but one day he's lowering, one day he's not lowering interest rate. And you have a scenario number 2 where we're trading between 580 and 520. going into April expiration. And scenario number 3, signs of recessions, maybe unemployment ticks up, maybe retail sales significantly go down, maybe earnings data are a lot weaker than anticipated, and we are dropping to another 10%, 480, 500. So how many of you say one? Trump is not going to let the market collapse, right? He has too much interest in the stock market, so we're going to one. Scenario number 2, Trump, doesn't care about re-election anymore, so he wants to make America great again, and he's not going to back down. So we're trading in this range between 580 and 520. And scenario number 3, Trump, overdid it, right? The new administration overdid it and flips economy into recession. All right, Joseph, scenario number 2. Thank you. Andre, scenario number 2. Kevin, 4. Thank you. Chuck, 2. Andre. All right, majority of you say 2, and I agree, right? Trade what you see, not what you think. Trade based on distribution of possible probability, distribution of possible outcomes. I think 580 is very reasonable that we can get to 580 in the next couple of weeks. It's very reasonable we can get to 530, 520 in the next couple of weeks. And that's in the scenario I would trade. What does it mean? That, we have a lot of overhead resistance at 565. Then that's your first sell level, right? Or resistance. And then 580, I would sell to, right? So as we are at 560 and we're approaching 565, I would look at my portfolio. Maybe you need to trim some of your long position. Maybe you put on a put spread. If we do drop to 520, 530, then I would consider maybe adding to some of your long positions. Maybe taking profit from your short position. I would be long and short the market at the same time. And as you approach in 580, maybe you have net more short positions than long. And if we get to 520 to 530, maybe I would be more long than short positions. So that would be my approach to the market. Any questions? All right, so how do we help at Tradespoon? So there are different services we have. I would consider joining us for Elite Trading Circle. This is where we have, first of all, we have a live trading room open between Keith, who is a market maker and worked at hedge funds. He can give you a perspective of professional trader of positioning, and he's been watching the market for many years from the hedge fund and institutional perspective. So this is a great addition to the team. And then my background is technology. We have models, we have that are trained on the data, that learns, make inferences without any biased decision. So I looked at the stock forecast toolbox and gamma exposure for many years, and I do know where some of the key support resistance trend levels, so more from a technical perspective and modeling perspective. So that's live trading room, both morning, first hour of the trading session and the second trading session. You can also see all of my trades, right? So we work together with Keith, and all of the trades you can see in the elite orders, right? Some of them options trades like SMTC, right? So I did a calendar spread at SMTC, basically on both sides, with the anticipation that potentially we could have a 2 standard deviation move in SMTC. And market is volatile. Any positive news, you have a SMTC or Broadcom, you have these 2 standard deviation moves to the upside. And SMTC is approaching that high positioning at 40 level. So this is an example of calendar spreads, right? Or sometimes we do verticals, sometimes we do merit puts. Spiders, I did put on a hedge, 550, 540 puts, because I do have long positions. How do I hedge my long positions? I can buy inverse ETF, right? I can buy gold. Gold has been in strong uptrend, so that's been a good hedge for the sell-off. Or you can buy inverse ETF. But if you have 4 positions, right, and I would risk only 2.5% of your portfolio, one of these positions could be Spider's put spread, or if you're not comfortable trading options, maybe it's inverse. SH. Spiders is SH. PSQ is QQQ, inverse QQQ. So this is an example of a hedge where I'm buying 550, 540 put spread, bought it at $2.80, risking $2.80 to make $7.20. And I have General Electric long positions. So it's a do I have any stock position? Let's see. General Electric, not General, sorry, Morgan Stanley. So I do have a Morgan Stanley position. So this is a combination of both stock and option trades that I've been trading around. And you can find all of my orders and all of my positions in Trader Log. You can enter a phone under SMS alerts, and you will get an SMS notification. So this is Elite Circle. If you want to follow our trades, if don't trade alone, right? Don't eat alone, don't trade alone. Those are not good signs. You want to be part of the community and be able to share ideas. So that's our live trading room in Elite Circle. If you are experienced trader, you have a trading plan, you've been trading long enough, you know what position size mean and how to determine position size, and you've seen 20-30% pullbacks, then we do have just signals, right? We have different models that run and analyzes different period of time. They learn on the data, they make predictions. You can find these signals in active trader, weekly trader, and monthly trader, right? So an active trader, for today, the signal is Altria. Right? Despite all the sell-offs and despite all the correction and consumer staples selling off, for whatever reason, Altria, people want to smoke, right? And Altria continues to make all-time highs, and model detect that, right? Model detects that, and this is why you have a signal in Altria. There's a signal in several actually utility companies today. And you can see Duke Energy, despite all the sell-offs, and XLU, Duke is close to all-time high. So there are still some pockets of strength for whatever reasons, right? That model can identify, and a lot of people are looking for these signals, right? A lot of people are looking for utility signals, consumer staples, and that you can find inside of Active Trader. Both bullish and bearish idea, right? If you want to short a stock, okay, Lenard, right? Home builders, kind of been leading the market on the downside. So the model detect those signals as well. So if depending on your style, if you're holding a position for a couple of days, active trader holding position couple of weeks, weekly trader holding position for a couple of months, monthly trader. And we suggest entry and exit price based on our predictions, either on yesterday's close or on what the stock forecast predicts, and suggestion to split these trades into two. At any given point, you only risk 1%, right? That's the key, position size. So if you do join us, if you already join us, I encourage you to have, especially in the beginning, just start with 4 positions, and no matter what, if you're down 2.5%, you're out, right? Because the market is down 10%. If you had 4 bullish positions and you're out at 2.5%, that's your maximum loss is 10%. So that means I would risk only 1% of my portfolio at these entry levels. Very often people would ask me, Vlad, you said short Lenard at 116.91, or it's 116.95, but what do I do? It hasn't reached that level. Or should I wait till 121 level because that's what you predicted? Not for you, but the model predicted. My answer to this, then you need to join Elite Circle, because you can ask these questions and I can help you, because you will see how I trade these signals, right? Because there's no universal answer, right? This is a lot of it has to do on your trading plan, how much money you're managing, and what your strategies are, right? So the purpose of these signals is for somebody who's experienced and just need AI to give them signals and to trade the signals. But if you don't know how to trade signals, then I would encourage you to join Elite Circle, right? We have other services where there's only spreads, premium portfolio, only stocks. You can also join that, consider joining them. We do have free content. So there's a lot of free content, newsletters. Every Thursday, every Monday, we send a newsletter. Every Tuesday, we send a short video. There is a learning center where you can learn about options trading, stock trading, technical analysis. All of that is free, right? So if you want to learn about technical analysis, advanced technical analysis, there is a library of these videos and guides that you can also find. And we also have a YouTube channel where you can participate in live training room on Wednesday to learn. All right, any other questions? Okay, again, sorry I was late. Keep an eye, I think right now, market, outside of these two events, I am bullish. I think we are getting close to the bottom, but you do want to hedge yourself in case, Trump on April 2nd, where this reciprocal trade supposed to take into effect, ticked for that, right? If he doesn't back off and institutes across the board tariffs and doesn't find any kind of some kind of compromise, then I think there is more room to the downside. So you want to be hedged for that event. All right, that's all I have for today. Currently trading and holding cover calls. Currently my favorite, if you have a larger portfolio, Chuck, like you do, my favorite is protective merit puts, right? If you're like me and you think market is oversold and Trump is probably gonna find some kind of a compromise in the next couple of weeks and 10 to 15% correction is enough, then I would consider protective strategies, right? You can say, okay, I think, Vlad, I agree, by May we're probably gonna resolve these issues. And okay, you say 540 is your strike. Okay, so then I would buy merit put, right? I would buy 540 strike, right, to cap my losses and have unlimited gains, right? Because if the market reaches all-time high, this is great, right? Then you can set up a trade. But if we drop 10 to 20%, well, then I want to know what my maximum losses are, and those maximum losses should be less than 2.5%. So merit puts is the way to go. Same thing could be done on the downside. If you're very bearish, then do merit calls, right? Short the stock, buy the call, because you know what your losses are. If you don't buy the stock, you don't know what your losses are, right? Gold is all-time high. That means that people are hedging, right? Just like I said, you want to be market neutral. How do you become market neutral? Well, if you have a lot of Nvidia, then maybe you want to buy gold, because in case market does sell off 10 to 20% additional, then the gold is going to continue to rally, right? Gold has been a good commodity to offset fears of recession, not Bitcoin, right? A lot of people say, well, Bitcoin is new gold. When the market goes up, yes, but when the market is going down, Bitcoin is not new gold, right? Bitcoin sold off just like any other high beta stocks. All right, guys, thank you very much and have a great day. Enjoy your weekend and hopefully to see you in the live trading room. Thank you.